So the question is, KG, I'm buying a house. Why do I need to put a deposit down when buying a house? I mean, this is different from my down payment, right? When writing an offer, why do I need to put a deposit down? Talk about that in a minute. Hey there, this is KG. I'm a realtor with Fairfax Realtor in Greenbelt, where we help buyers to buy their dream home and sellers to sell their houses. And we do this in the Maryland, DC, and Virginia region. So if you're looking to buy, sell, move, invest in real estate, contact us below. We'll take care of you. And don't forget to subscribe to the channel to get updates once we upload a new video. So the question always is, why do I need to put a deposit down when I'm just writing an offer? What happens if you don't accept my offer? How much do I need to put down? Am I going to get that money back? What is going to happen to my money? Is the seller going to just take my money? Hold your horses. I'm going to answer all these questions and more in this video. So, why do you need to put a deposit down? Because it shows that you are serious. The seller knows you are a serious buyer. Along with your pre-approval, is also going to be a deposit. How much do you need to put down? The advice I always give my buyer clients is, you want to be competitive. If you like the house, so you want to make sure you really like the house and you're going forward with this contract, and you want to make sure the money you're putting down, you know, you can lose it, right? So you want to make sure you like the house. So the advice is always like 1% of the sales price minimum. So if a house is $500,000, you want to put 1% of that down, minimum 1%. But in a very competitive market where you're going to compete with other buyers that are bringing a lot of money down, you may want to rethink that. Like I said, that's the minimum. If you can go higher than that, for a house of 500,000, you definitely want to put like 10,000, 15,000 down as deposit, right? So that shows the seller that you are a strong buyer. So what happens to the money? The money that you put down is going to be with the title company or your real estate company, depending. In Maryland, mostly now we put the money with the title company. They put it in escrow accounts. So that's an account that does not generate any interest. We will just hold it in that account until the transaction closes. So the money doesn't go to the seller, it's made payable to the title company or the real estate company. So what happened to the money? It goes in escrow and it's sit there. What happened to it at the end of the day? At the end of the day, after the transaction is ready to close, whatever that amount is going to be deducted from what you need to bring to the closing table. So, for instance, if at the end of the day you're supposed to bring $30,000 to closing, you know, your down payment and your closing costs, but because you've already put $15,000 as deposit down, when the time comes for you to sign the paper and get your keys, all you have to bring now is $15,000 because you already put a $15,000 in the deposit down, right? So the other thing is, what happens if I don't close the transaction? Many things can happen if the transaction does not close. You can get your money back and you can lose your money. So let's talk about how you can get your money back. So when you write a contract offer, there are what we call contingencies. What that really means is this contract is depending on certain things happening, right? Certain things happening, getting satisfaction in certain things. Part of those things are home inspection, appraisal, and financing, unless you're doing cash. So let's go with somebody that's doing financing. Home inspection, appraisal, and financing. So when we write the offer, we say this contract, we're going forward with this contract as long as we're okay. That means the buyer is fine with the home inspection that is going to be completed after the contract is accepted, right? So you're going to do home inspection within specified days. It's not just open blanket. Within specified days, between 5 and 7 days, you do home inspection. 5 and 7 days after the contract is accepted, right? That's when it starts counting. You complete home inspection. Once the home inspection is completed, if everything is fine, we move forward to the next phase. You cannot use the home inspection anymore to get out of the contract, right? If things are bad and you really want to get out of the contract, we can now release the contract at this point. Sign a document that because of the home inspection, you're no longer moving forward with the contract. You sign the paper and the seller sign the paper and you get your money back. But remember, time is of the essence. So when we put days in the contract, we're talking about days like Monday, Tuesday, Wednesday, Thursday, Friday, Saturday, Sunday. Not working days. So when we write a contract, we say within 7 days you're going to do home inspection. That means within 7 days we need to get a home inspector to the house to do the home inspection, to get the report and send the report to the seller to either make repairs, or counter offer. I mean, so many things can go on and go wrong in that process, but it's always very important to stay with that time frame once the home inspection is done. So when the hurdle of home inspection is completed, you did the home inspection, everything is fine and you're okay. So there's a caveat though, right? If the house is being sold as it is, upfront that the seller is not going to make any repairs. So your recourse is to just cancel the contract if you don't like what comes out of the home inspection and move forward with another house. You get your money back. But if the seller is willing, if it's not sold as it is and the seller is willing to make repairs, now we can go back with the list of repairs and negotiate with the seller to fix all or fix some of the repairs. It's all negotiation. So once everything is fine, you're okay with the repairs they're going to make, or you're okay with the home inspection, it goes to the next phase. So you cannot get out of contract with home inspection anymore. Now the next phase is appraisal. And many times appraisal is done within 25 days of the contract acceptance. So the days start counting once the contract is accepted. So the appraiser needs to be done and comes back satisfactorily. Everything is fine as far as value is concerned. And if that is okay, we move forward. Financing, right? Now the loan goes into underwriting. The lender is going to get your information, which most of those information they've already taken those information up front, but they will need updated information like your pay stub, current back statement, and your letter of employment, from your employment, verification of employment, verification of rent. The loan will go through what we call underwriting process. Once everything is good with underwriting process and the loan has what we call conditional approval, it's moving forward. However, there's a caveat. If during the home loan processing, you as the buyer do something that jeopardizes your loan, you may lose that money. What am I talking about? If you as a buyer, while the loan is being processed, you went ahead and buy a new car, or your credit score dropped because you didn't pay your mortgage, you didn't pay your rent or credit card or whatever bills, your credit score dropped and you are no longer able to qualify for that mortgage, you may lose your money. So you have to be very careful. You may lose that deposit. However, if the loan was not approved, not because of your fault, but because your loan is not approved, maybe your debt to income ratio, hope not, something went bad, or the interest rate they're now quoting you just kick you out of what you can afford, you can release the contract. It means you give the seller notice that you cannot move forward because the loan is not approved. Now, the caveat with the loan not being approved is your lender has to give you a letter of loan being declined. So you want to make sure you get that letter from the lender that loan is declined. And all this thing has a time frame. You don't want to wait till the last minute. It has a time frame, because remember, the seller is also making plans with their life on where they're going, or if they are buying another house. So you really want to be on top of things. Your agent wants to be on top of things, right? That's why we work with lenders that knows what they're doing. Anyway, so if the loan is approved, conditional approval, and everything is fine, you cannot get out of the contract anymore. Even if you see a house that you now like another house, you can't get out of that contract. Otherwise, you're going to lose your deposit. And this has happened to a lot of my sellers. And they went after that deposit and they received it. They got it. I mean, one, we went to court and we got that money back. So those are ways that you can get your money back, your deposit back, right? Now, how can you lose it? If you don't do things that you're supposed to do on time. Home inspection time comes around. You didn't do home inspection at that time that was supposed to be done, and the time frame is gone. After 7 days, we went ahead and do home inspection. The time is gone. You cannot get out of the contract with home inspection anymore. Appraiser is not an open check, right? Time. There's a time frame. If the appraiser is not done on time, the seller may not release the money. You want to make sure everything is on point. Financing. The financing is not just open range. There's a time frame. If you look at a contract, there's a time frame. If the financing is not done at a specific time, when that time comes and goes and there's no notice of what is going on with the financing, you cannot back out without losing your money. Or, like I said earlier, if you just change your mind and say, I'm not buying anymore, you can lose that money and the seller may take that money. So those are some of the ways you can lose your money, some of the ways you can get out of the contract without losing your money legitimately. The other way you can get out of the contract is if your house, get out of the contract and get your money back, not a reason to get out of the contract, but if your house is in a home, is in a planned unit development, that means it has a homeowners association. When you get the package, the homeowners association resale package, if you read the package and there's things in that package, in that resale package, that you don't agree with, that is going on in the community, maybe you can have a barbecue, maybe you can fence your yard, maybe you can have certain dogs, I mean, whatever they put in the resale package, and you find out that, oh no, so you need to quickly notify your agent so that you can get out of the contract within a specified amount of time. So when they provide you with that resale package, you want to look at it and study it, and you have what, a few days to get out so that you can get your money back. All right, so that is why you need to put money down when you're buying a house, right? It shows that you're serious. So if you're looking to buy, sell, move, invest in real estate, and ready to put money down, contact KG. Will take care of you. And don't forget to subscribe to the channel to get updates once we upload a new video. Happy buying.